Right now, 90% of self-proclaimed passive income gurus in the US are broke. They are actively promoting an algorithmically engineered scam matrix. The mainstream wealth media demands you believe financial sovereignty requires zero work. They flash generic images of beachside laptops to exploit your cognitive greed loop. But when you peel back the narrative and isolate math, the truth shatters. Today, we are dissecting the exact, irreducible mechanics of passive capital systems. We are stripping away the hype to give you the asymmetric data blueprint. The fundamental deception begins with how automated wealth generation is framed. Gurus claim you can scale 6 figures effortlessly with zero upfront friction. Look at the hidden mechanics of dropshipping, the darling of wealth extraction schemes. They want you to leverage credit lines to finance targeted advertising campaigns. These ad funnels are engineered to trigger impulsive purchases in suburban America. In this setup, your cognitive load is low, but operational risk is vertical. One sudden shift in platform ad algorithms evaporates your entire income stream. You focus on the sales loop, blind to the predatory landscape surrounding it. You do not own the supply chain, logistics, or critical customer profiles. You possess zero true structural utility inside this commercial ecosystem. Now let's examine the grand illusion of dividend trap stock tracking. Active funds promote companies offering exceptionally high quarterly yields to extract capital. Unsuspecting retail investors pour money here, chasing low-effort cash distributions. But hyperinflated yields often signal catastrophic internal structural risk. When corporations face cash flow disruption, payouts are deleted instantly. Active traders get stuck holding a rapidly depreciating, toxic corporate asset. Meanwhile, institutional systems continue to liquidate positions via automated triggers. Every single day, your capital baseline sits trapped in an underperforming equity. High overhead US inflation actively dilutes your real-world scarcity value. The system keeps you focused on chasing short-term yield percentages, while silent structural erosion destroys your principal capital under the surface. A minor 1% management fee cannibalizes a third of your final wealth. You hand over your entire retirement runway to an underperforming middleman. Let's analyze the deadliest trap: predatory coaching and consulting loops. These programs rely on targeted marketing to extract massive upfront fees. They use initial participant capital to finance subsequent executive payout tiers. They exploit your evolutionary desire for immediate social proof and status. Promoters broadcast highly engineered illusions of frictionless lifestyle freedom. Unwary earners lease expensive status symbols just to project professional credibility. They trap themselves in an unyielding web of rising fixed liabilities. This permanent overhead forces compliance to preserve their fragile baseline. Your absolute lack of liquid reserves is the ultimate labor control mechanism. Now let's isolate the deep psychological weapons inside modern social feeds. We are bombarded with curated displays of artificial peer group wealth. The digital matrix triggers an immediate anxiety of falling behind. When you feel financially insecure, your primitive response is consumption. It is a closed loop designed to extract your remaining surplus. Sarah cross-references these behavioral metrics on her dual monitor setup. The data shows that consumer baseline accounts remain completely flat because the convenience economy quietly eats away your foundational savings rate. Ride-sharing and food logistics applications eliminate your potential asset velocity. The second major passive illusion is the automated print-on-demand empire. Platforms promise zero-friction fulfillment while you supply digital artwork assets. But without traffic distribution networks, your storefront is entirely invisible. Your listings sit lost inside a saturated market algorithm. You become an unpaid data asset generator for their ecosystem, while their processing architecture captures transaction fees from every attempt. Let's analyze unregulated real estate syndications targeting corporate professionals. Promoters package commercial properties into passive fractional investment shares. They project immediate cash-on-cash yields, hiding severe structural fees. Excessive acquisition costs systematically dilute your initial principal contribution. The retail investor assumes security, blind to complete liquidity lockups. When macro cycles shift, payouts freeze, trapping your cash indefinitely. Sarah maps this liquidity drain by adjusting corporate matrix metrics. Now let's transition into the decentralized finance token space. Liquidity pools promise triple-digit yields for staking digital assets. Speculators believe they have uncovered an asymmetric financial cheat code, but they operate completely exposed to devastating impermanent loss math. If asset values diverge aggressively, the protocol burns your principal. You hold worthless tokens while smart contracts extract real value. This brings us directly to an unshakable institutional reality. If an income framework requires zero work, you are exit liquidity. Let's pivot toward authentic passive allocation, broad index tracking. Real passive wealth cannot exist separate from aggregate macroeconomic productivity. It must be explicitly anchored to systemic corporate revenue generation. When you purchase a total market index, you own real corporate profits. You own the collective automation and efficiency of market giants. Sarah cross-references historical data to confirm long-term velocity vectors. The empirical data proves simplicity systematically beats speculative trading structures. Automating your asset allocation completely removes destructive psychological friction. You do not waste cognitive energy tracking charts, math compounds. Now let's examine high-yielding sovereign debt instruments like treasuries. When macroeconomic volatility fractures commercial banks, capital flees to safety. Sovereign reserves provide guaranteed returns backed by national taxation authority. It is an unflashy asset module engineered purely for preservation. Elite capital allocators accumulate these buffers while masses chase trends. They choose structural safety over the short-term dopamine of speculation. Sarah closes her algorithmic software models, finalizing the target data. We have completely exposed the landscape. Now build your fortress. Stop acting like an anxious retail gambler. Become a designer. Implement the non-negotiable architectural boundaries required to scale sovereign wealth. Survival capital isolates your mandatory obligations: shelter, health, and protection. Vanishing capital contains every automated subscription, lifestyle, luxury, and convenience. Log into your accounts daily and isolate the hard migration numbers. You will be shocked to discover the volume escaping silently. Execute an immediate, ruthless purge of non-essential recurring membership models. If an application fails to yield asset utility, delete it. This immediate operational contraction secures a predictable monthly cash surplus. Route this captured asset delta directly into a liquid buffer. Your baseline target is a $1,000 cash shield in 30 days. This cash buffer serves as structural insulation against systemic chaos. When emergencies strike, you liquidate liabilities without touching high-interest credit lines. You deny credit networks the chance to profit off vulnerability. Treat your savings engine like a non-negotiable sovereign billing agreement. Do not save what remains after spending. Spend what remains after saving. This inversion of standard behavior rapidly multiplies your liquid operational runway. As the shield crosses the target baseline, your psychology shifts. You no longer panic when minor macroeconomic volatility shocks the market. You possess the safety margins required to absorb real-world friction safely. But survival is just the baseline. Freedom is the true destination. Scale your defensive fortress to encompass 6 full months of survival costs. This degree of liquidity transforms your position inside the labor market. You negotiate career terms from absolute, unshakable transactional strength. If an environment turns toxic, you can walk away instantly. Physical survival no longer holds a weapon to your career choices. You dissolve the invisible web of extraction trapping 90% of workers. The consumer ecosystem is built to keep your balance bleeding dry. Your visual distraction is their profit. Your cash shortage is leverage. Reclaim your trajectory by refusing to finance their artificial lifestyle parameters. View every single preserved dollar as a literal brick in your wall of independence. The software systems will continue to advance their consumer tracking tools. But once the underlying financial matrix is decoded, illusions shatter completely. Subscribe to the channel and drop a like if you're ready to break out. Align your life with the unyielding truth of math. Close the screen and build.